So this is the third part of multiple time frame analysis series. In the first two parts, I've shown you how I selected Adani Ports and then TCS that we selected in previous week. In this particular week, I'll show you how I selected the stock ACC and why within the cement sector, this is the only stock that I've chosen for the next 1 to 3 weeks. So the link to both these videos is given here. Just click on the I icon and then you can watch the remaining two parts of multiple time frame analysis series.
Click on the subscribe button and bell icon to get instantly notified when a new video is uploaded. Thank you for subscribing.
So based on what we discussed in the first two parts, our first step is to always go down to a monthly time frame and then to analyze the overall price action. So if you take a look at monthly time frame, the level between 1800, I'll mark out 1800 here, and the level between 1900 has posed stiff resistance for ACC over the last 2 years. So the resistance region that I have identified is between 1800 and 1900. So just let us take a look at the price action patterns here. I'll just remove this marking and even this marking here. So again, series of long wicks that are visible, a bearish engulfing candle after series of long wicks, and then again series of long wicks and one more bearish engulfing candle. And then obviously you saw price moving lower, that is in the early part of this year. So when it comes to period between 2017 and 2018, again you're seeing series of long wicks and then a clear breakdown in price that caused price to consolidate for a period of about 12 to 13 months. Now why this level of 1800 and 1900 is important in today's context, because I'm selecting this stock from the next 1 to 3 weeks trading point of view. So why this level of 1800 and 1900 is important, that I'll tell you towards the end of the video, where I'll show you how monthly levels can be used in order to exit positions. So the second step based on the multiple time frame analysis framework that we have discussed is to go down on daily time frame chart and then conduct some basic price action analysis. So when it comes to the recent price action activity in ACC, again you're getting a long wick near the resistance level of 1800 that we just saw on a monthly time frame chart, and from there price has now moved down to something like 1600, that is as of today's closing. So why this level is important, because if you check on a daily time frame chart, this was the previous region of consolidation and you saw breakout happening with a wide range candle, good amount of volume expansion. Such consolidation regions usually act as strong support and resistance level. So price has a breakout after this consolidation level here. So naturally this entire region now becomes a region of support where price can clearly come down and take some sort of support, that is buyers can step in. So this region between 1580 and 1640 is a region in ACC where you can see some sort of consolidation and you can also see some sort of demand coming up in the stock. So up till now, keep two things in mind. Number one, on a monthly time frame chart, we have identified 1800 and 1900 region as a strong resistance region. And number two, on a daily time frame chart, we have now identified 1580 to 1640 to be a region of demand, that is support. So why level of monthly time frame and daily time frame is important? This is something I'll be telling you towards the end of the video, where I will be explaining a few things about trade management. That is how I will structure trade in ACC over the next 1 to 3 weeks. So for those of you who are channel members, please note that gap trading part 1 has been released. So please check the link in the community section. Also, pullback trading part 6 will be coming out next week. Please keep your notifications on and please be active in the community section. Now this is the link. This is where I explain a lot of things about the stocks I'm tracking and the sectors I'm tracking. And for those of you who are not channel members, you can just join channel membership for 1 month and watch all 30 videos on price and volume analysis series. Now the third step that we discussed in the last 2 videos in multiple time frame analysis framework was to go down to something like a lower time frame. Here we choose 30-minute time frame chart, again to identify entry opportunities. So if you look at the 30-minute chart of ACC, you're clearly getting this structure of lower high and lower low. So certainly this is not a place to initiate a trade. At least I would want a structure of higher high and higher low. That is when you know a stock has stopped falling and has started rising again. So if you take a look at the major pivot points in ACC, I'll mark it this way. So this will be first pivot point, that is first major pivot point. This will be second major pivot point, and now price is forming a new low. So what I would personally prefer is for 1700 to be crossed. That is just based on the current major pivot point. It can happen that ACC will consolidate some bit and form one more low point. In that particular case, we will get one more major pivot point here. So you have to understand that when on a lower time frame stock is moving lower, it can simply consolidate and again resume its journey on the downside. So this is on a lower time frame chart. That is why when you're conducting something like multiple time frame analysis, you need to align with higher time frame and you need to enter when the lower time frame trend also reverses and starts aligning back with the higher time frame. So in this section, let me explain why in the cement sector I have only selected ACC. So my watch list is of ACC, Ambuja Cements and Ultratech Cement. So these are the three largest cement players, and since I prefer large cap trading, that is why I have only these three stocks in my watch list. So if you go to something like tradingview.com, you will get a compare indicator. This will be right next to the time frame. Just click on it and from the same sector, enter the stock names, you will get a chart like this. So this is called a comparison chart, where from any given point of time, you can measure how much a stock has fallen or risen. So when you do comparative analysis of the cement sector, ACC has given about 70% return since the time market started bottoming out. Nifty has given about 64%. Ambuja and Ultratech have given 58.5 and 58% respectively. So what this figure tells you is that ACC has not only performed the entire cement sector, it has also outperformed the benchmark index, that is Nifty. So this clearly tells you that there is strong demand in this stock, and if someone likes trading the cement sector, then ACC should be the first preference, and this is only in the large cap space. So you can include one more data point in terms of comparative analysis. When you're conducting sector analysis, this chart is extremely useful, and of course this is completely free on TradingView platform. So before we move forward, an important announcement. These are the only two channels that are associated with our YouTube channel. Please be aware of all the fake Telegram channels that are using name very similar to ours, and please check the spelling before joining the Telegram channel. So let us also take a look at what is going on weekly time frame chart. So when I take a look at these candles on weekly time frame, it just tells you that there can be some more downside that will be prevalent in ACC. So again, recollect, region of 1580 to 1640 was a demand zone. So it is quite possible the stock will consolidate and move lower. The main reason being, just take a look at these two weekly candles. Long wick, this equals supply. Take a look at how the candles are closing. This is near the low point of the entire week, represents strong selling. Again, if you take a look at this candle, that is current week's candle, long wick again represents supply, and closing is near the low point of the entire week. So certainly in the very short term, sellers are definitely strong, and we can see some more consolidation, some more downside playing out in the stock. So on weekly time frame, these are long tails, so these will automatically provide some sort of demand. So price can consolidate here, and this is where you have to look for trading opportunities. And let me now show you how the levels that we determined in monthly time frame and daily time frame chart will be useful in how to plan a trade in this particular stock. So based on the multiple time frame analysis, we have determined that on monthly time frame, region of 1800 and 1900 is strong resistance. And number two, based on daily time frame, there is strong support between 1580 and 1640. And based on weekly time frame, we have seen that some more selling can happen because sellers are clearly strong currently. So how do you use this information and devise a trading plan? So I'll just mark out the demand region here. This is between 1580 and 1640, right? So price is currently trading at 1608. And given how weekly candles were shaping up, it is entirely possible for stock to go down to something like 1580. It can even go down to something like 1520. Why? Because again, the previous consolidation region was between 1520 and 1540. So if stock does not find support here, it will find some sort of support in this region. So when I'm trying to trade any stock, I clearly like to define my entry region based on what we have studied. It will be between 1520 and 1580. I also like to mark out my potential exit regions, and that will be between 1800 and 1900. So I hope now you can see I have devised this particular level from daily time frame analysis, and scale out or exit levels I have identified from monthly time frame analysis. So this is where multiple time frame is so useful, because you can identify potential demand and supply regions. So what is the basic essence of trading? Buy at demand level and sell at supply level. So this will be demand and this will be supply. So when it comes to risk reward, I'll just remove the marking here. So let us assume that we will get an entry between something like 1520 and 1540. We will have a stop loss of something like 2%. So that will be about 30 rupees. So if we are taking trade at something like 1530 and we are keeping a 2% stop loss, then our stop loss will be something like 1490 to 1500. And where will be the scale out region? That will be between 1800 and 1900. So just take a look at risk reward. Your risk is 30 rupees and your potential exit will be 1800 minus 1500 or 1530. That would be roughly 270 rupees. So when it comes to risk reward, this is what is the most essential aspect of trading. And I've just explained how my thought process is in terms of identifying low risk entry opportunities on lower time frame charts and then scaling out at higher time frame resistance level. So this is a very simple concept and you should be building upon it. And for those of you who have watched my pullback trading series, now I hope you can clearly understand why ACC qualifies clearly for a trade and why this should be tracked closely, as good trading opportunities in terms of risk and reward will show up. So for those of you who have missed the first two parts of multiple time frame analysis series, please click on the I icon here. Please do watch those episodes as well. Your understanding about price action analysis and multiple time frame analysis will improve a great deal. So do keep your notifications on for the next video. I will try and release one video either on Wednesday or Thursday. So thanks a lot for watching this video, guys. Kindly consider hitting the like button if you find the content useful. Have a great weekend ahead. Take care and be safe.